Good morning, everybody. Happy Friday. Welcome back to the Poll Report. It is 9 o'clock on September 30th, end of the month, end of the quarter. Let's get going. We'll dive right into the charts, take a look at everything from stocks, some option expirations, some currency strength chart, and then where we're over the next 3 months. It's going to be an interesting way to see how this is. News this morning. U.S. is passing, I think it's in the U.S. House's hands right now to get it to President Biden on Friday today for the 11th hour deadline as usual. Stopgap funding for the U.S. To prevent a partial government shutdown through December 16th. Additional aid to Ukraine. Nothing's really changed. The market back down to some fresh lows. We keep testing these levels on the S&P. The Qs made some fresh lows, or at least tackled those lows yesterday. So we have everything officially in bear market territory. And is it going to get better from here, or is it going to get worse from here? We're going to find out. So that's where we're at. Here's a currency strength chart from overnight. Pound's been all over the place. We had a flash crash on Sunday, Monday this week. Actually offered a ton of opportunity for traders to get in on some of those lows. We had some pending orders that were filled, made some nice profit. But the pound, you can see, is just super, super volatile. Dollar yen are actually emerging as one of the stronger pairs this morning, and then our Kiwi is down on the weaker side. So that's what's going on there. Pre-market for everything is pretty much where we left off yesterday. I would still be looking and expecting some more downside. I have some thoughts on what the month of October looks like. In my trading rooms this week, I was discussing the SPY to just finish the move. If this is going to be a fifth wave, something like this, where it's wave 1, pullback wave 2, wave 3, pullback wave 4, wave 5. Hopefully we'll see wave 5 get down. And again, I'm not encouraging the market to fall, but it seems I'd rather see the market finish this move to give us buying opportunities, as opposed to have the month of October be some like dead cat range that's going to wait for some type of consolidation and volatility for November, December, because we still have to go through U.S. midterm elections. So is it a breakout here that puts in a bottom? We just trade the range. But I'm not trying to overcomplicate my technicals. Now I say that, and I realize I have like 20 lines on my charts, but I go, clean all this stuff up and just look at a fifth wave move. So yesterday, reviewing things, Apple was hit pretty hard. We were down to the low 140s, which is good for a really nice in the money bear call spread that we did for my equities on demand class. We sold the 145, sold the 140, bought the 145. And that's up about 55%, 60% of the profit level. And we're going to see if this continues to head lower. Also, the shares I own of Apple are covered. So that's really what this last 3-4 weeks been, is just covering up shares that I own, lowering the cost basis to the best of my ability. Let me open up my notes here. Right there. And come down to the quick review. Here we go. So that's August, SPACs, 16th. Here we go. So from this way down, just working on all this. So expirations, adding covered calls. We actually added quite a few new orders this week. Unilever, FXI, Amazon, some pending orders. We looked at KHC that I got to sign. I'm going to hang on to that stock a little bit. Ford's been being beat up pretty badly. Alibaba had some nice credit spreads filled on that area. SPXY, the one stock that I might get called away this week is some Norwegian cruise lines. We're trading at, survey says, $13.83 pre-market. If this closes above $14, I'm going to lose this for some profit this week, which would be nice, all things considered. So I'll keep an eye on this one. I'm going to set a chart at, let's do 14.10, see if it gets back up safely above $14. Otherwise, I'll just lower the cost by another 30-40 cents and just keep drilling this thing down. And that's what I'm doing with a lot of my covered calls. Let me log into YouTube and see who's in the house today. Also, I'd like everyone to take a look at an interview that myself and Jared Johnson did with my Beyond Capital channel. We interviewed Tom Sosnoff of Tasty Trade and Tasty Works. That was a blast. We got to hang out with him for like 45 minutes. And, always I've followed Tom for a long time, followed Tasty Trade for a long time. So that is in the Beyond Capital channel. So you can go to, see here. Everyone's logged in. Chris is here. Ranji here. Gary, good morning. Dave, good morning. Moch, good morning. Linda, what's happening? Let me find that video. And I'll post the link in the chat. So you can search for Beyond Capital Group, subscribe to that channel. It's myself and Jared Johnson. Here's the link right here. There it is. Copy. So you can check this out. Let me join in. Okay, give me 1 second. There we go. All right, so and Capital with Tom Sosnoff. There's the link for that video. Check it out. Good morning, Denise. How are you? Happy Friday. Okie dokie. So Norwegian Cruise Lines might lose the stock this week. Anything good coming out of China? Alibaba is trading at 79.06. It's covered this week. I'm going to keep repairing it. Hopefully I can drill it down with $90 and $91 calls, get it called away for a couple bucks. Also, some credit spreads had them filled, the 85 by 80, the 80 by 75. Again, a lot of the credit spreads and expirations I'm pushing out are late this year, Q4, Q1 of next year. I'm just giving the market the time, hopefully the time and space that it needs. If the market's, kind of in tantrum mode, that's fine. Let it, let it have get its energy out, right? That's what I'm saying. I'd rather see the market dump another 5%, 10%, find that pre-COVID level, see the final capitulation move so we can look for, the rise from the ashes type thing. So, but I really think after, crazy amounts of trends, which we've seen for the last couple of years, fabricated or not, trends to the upside. We've been in a correction this whole year. The correction truthfully has been pretty solid. I mean, it's high to low, pull back again, high to low, pull back again, and we're right back to the same lows. Now, I think the market should just continue to go a little bit lower. Look at some equilibrium from this big COVID low to this big, post-COVID high. If the market pulls back 50% of that makes sense. If we pull back 30%, when I say 30%, like 30% from the highs is the pre-COVID high. If you take the COVID low swing to the COVID high, that 50% is a nice little equilibrium as well. And what was created and kind of fabricated could be, the correction necessary. And I think over the next probably 6 to 12 months, the market doesn't really have the energy to go higher. Maybe it's exhausted to the downside, but perhaps it doesn't have the energy to go higher. Now, that being said, I still think there's a lot of opportunities, in stocks, especially using options to generate some decent income. I think the buy and hold, I think passive investing, good luck. I think you really have to turn on the action, turn on the activity, start churning a little, not churning, that's the wrong word. But you have to start having more activity in your portfolio. If you want to generate some returns, I think it's the days of marrying positions and like, oh, I'll just hang on to this forever. Because you might see no growth for the next year or 2 or 5. There's some interesting data I'm reading up on from Data Trek, and they were looking at basically a 15-year period from the late 60s into the early 80s, and inflation was so high that the market returned like next to nothing for over a decade. And afterwards, when inflation was finally under control, then we had a 20-25% plus rally in the markets, and it was like a 20-year bull market after that. But until then, it was just very complicated to get any growth. So just be ready for, trading ahead as opposed to, look, everyone's been made to look pretty smart the last couple of years. If you've been mostly a buyer for the last decade, even since 2009, you're getting some people in the industry with a track record. They're like, oh, I've been killing it. It's like, well, yeah, you've been killing it with a backstop. You've been killing it with accommodative monetary policy. I just saw this interview this week with Stanley Druckenmiller that sounded terrible, just talking about the debt service and how within 20 years, 25 years, based on interest rates, if they continue to go higher, that, the debt cycles are basically unsustainable and unserviceable, and you'll run out of money. So, again, I'm not doom and gloom. I think that people that take that approach and it's always bearish and it's always doom and gloom, you just have to preach that for years and years and years, and eventually you're proven right for a phase like this. Otherwise, my job is to be trading and generating income and profits. So how do you do it? You trade stocks and options, you trade currencies. Crypto's an interesting game right now. I mean, we're basing around the 18K. We're at 19,276 on Bitcoin right now, watching to see if the 18K holds. Ethereum is holding a little bit higher. We're trading at 1322. Maybe we claw our way back down slowly, back down to $1,000, but still looking for some pretty massive support on Ethereum. See if that 18K holds on Bitcoin. Market cap has been wiped by more than 60% essentially. We're nearly $3 trillion in 2021. Now we're under $1 trillion on coin market cap with all the big ones. So there's probably a long period of consolidation, a long period of regulation, and the future of crypto kind of remains on hold, I guess. I don't think it's necessarily going away. I mean, blockchain, Web 3.0 stuff like that is happening. That will be like the next phase, but is it all going to go into coins or is it just going to be something totally different? We don't know. So speculation, be willing to risk it. That's all. So where are we at this morning for the SPY? Down about 20 cents. Currency wise, let's take a look at the dollar index. So we had a decent couple of days to the downside after some overbought conditions, a little capitulation move from last week, Wednesday with FOMC. We don't have the FOMC really chiming in until November. This is end of month, end of quarter. Like we said, we kick off a new week with non-farm payroll on Friday. CPI data is going to come out at some point. Can somebody give me the date, by the way? Let's look at Forex Factor. Let me see if I can locate the CPI data. If anybody knows off the top of their head or they can find it on the calendar, I'm curious. So we do know that the Fed Watch tool, November 2nd, right before the midterm election, is going to be that next FOMC rate decision. And right now, the probability is a 75 basis points hike. They're pretty close in probability, but the higher, the slight edge goes to that 75 basis points hike. The way the market's anticipating the Fed, moving for December or November, December would be a 75 basis points hike in November, 50 basis points hike in December, and then a 25 basis points hike either February or March. And that would be what I've talked about the last month is the market's anticipating some type of Fed pause, not cut, okay, but pause. And that gives us October CPI data to be read. So September's numbers, housing has to be coming down. I mean, you can sense it, you can feel it. Gas prices. I know energy popped this week a little bit, but the sectors are all in the red. Nike misses earnings, was dragging retail down with it. So look, everything's down, and I think that's going to help mostly bring headline and core inflation lower. But man, things are just the sentiment is terrible. And historically, when you look at these horrible sentiment situations, it usually results in a buy opportunity. But I don't think the bottom is necessarily in. I'm not interested in calling the bottom. This dollar continues to stay super resilient, and I'm curious how this whole thing shifts and how the market's going to end up pricing in this Fed pause. Because right now there is no such thing as a Fed pause getting priced in. I still wonder if the market's just waiting for the Fed to be like, oh, they were going to raise rates again through 2023. And this target that we keep mentioning continues to get shifted. So will the Fed get above 5% this year? Well, by March, highest probability is that we'll be at 4.5 to 4.75%. May, same thing. So the probability right now of above 5% is slim to none. Most of it's 4.25 to 4.5, which is still another 1.5% higher over the next 3-4 months. But this year's been all about the Fed. So if we take a look at the dollar index, is it putting in a high at this 115 level? If 115 is a pretty big spot of resistance back to 2001, 2002. I had these, you can see these orange lines up here. These are all chart alarms, just in case we're going to see some other, wild move where it gets further and further away and stretches. So we'll keep an eye on things. But, to me, if we go higher without correcting first, which I am looking for a three-wave correction on these dollar crosses, but if we go higher first, 120 is, I'm just waiting. 120, I'm looking to actively sell the dollar. Any type of confirmation, I'm going to start stacking some orders to the downside. And that resistance, I think, would hold pretty nicely. So let's have a look at everything. You have some requests, feel free to check it out. Craig says October 13th CPI. Okay, very good. Thank you. Well, think about that, Moch. The iced tea thing with Tom Sosnoff. Yeah. So think about a 20-year project, though. And now Tom's in a position where, the guy lives downtown Chicago. They have a couple of offices, and all he wants to do is, have a place to go. So I love it. So we're probably going to go there in November, December, and roll into Chicago and check it out if it opens up, and pop in and see everyone at Tasty Works, which would be fun. But yeah, iced tea, not a coffee drinker. So it's funny. But when he said most unique place, it's like, I believe him. I believe him. Do I trade futures? So it wasn't as stressful as options and stocks. Actually, I think, I'm not saying it's stressful, but I think futures. So I did trade futures pretty consistently. I taught some classes for FX Trader's Edge and some wavy tunnel education on futures. I just didn't like, sometimes it was the lack of liquidity. I would get slipped on some entries. I'd have problems getting filled at levels I want, problems closing at the levels I want. So that was a deterrent for me, considering how liquid Forex is. And options, other than not getting filled or trying to ask for too much premium, I'm typically a premium collector in options. So I don't think options is stressful at all. I think options is, to me, one of the most versatile assets you can trade in the markets. You essentially have tons of ways to protect yourself. And I think that, those are tools and strategies that were not given to retail traders until the last, 15, 20 years. So now that technology is better, now that commissions are lower, I think options are a beautiful way to trade the markets. So just, I don't know. I mean, do your research and due diligence on futures. But what I didn't like is it's a super volatile 2 to 3 hour window, which I think for some, you like to punch in, have your two hours of trading. There's just so much noise, during like the opening bell. But obviously futures markets open like 23 and a half hours a day. So there's a lot more to trade. But I just didn't like some of those like gapping pockets. I didn't like, getting slipped on entries and not getting filled. And so that was what kind of turned me away from it. But I mean, yeah, check it out. I mean, if your friend's decent at it, then learn from them, So yeah, but let me know if you explore it. Yeah, let me know. All right. So chart alarms are set on the DXY. Let me set one down here to today's low. We'll go fresh lows here and see if we can actually come back and tap this 50 EMA and this weekly pivot around 109.13. So recent lows, set a chart alarm right there. Okay, let's take a look at some yen crosses. Dollar yen, it's always trading at 144 and change, 144.62. I did put in a couple of pending sell stop orders this week with the flex traders. It was 144 or 143. Where's that right here? Yeah, there it is. 143.40. It's a sell stop. So I still have a larger position kind of built up with a group. We're looking at this big BOJ candle, that intervention candle that happened last week. I'm still prepared if this does stubbornly go higher, 147.50 to 150. But if we also just spend more days trading inside this candle, there's probably resistance there. There's probably support here. There's going to be some noise. If we come up and we test this high and then we reject, I have a sell stop sitting right there at 143.40. I'm trying to get a little head start on this one, going back down and looking for some repricing towards this 200 EMA. We're still over 1,000 pips away from that, by the way, which is one of the highest bar counts I've seen in Forex. So that's a big one. And then dollar index DXY, same thing. Euro dollar still has a crazy high bar count. Let's take a look at the pound dollar. So pound dollar came right up to fill that pocket. That pocket was 112. So I did get a chance to run. I certainly forfeited some profits, but I was filled on the flash crash at 104. I took it up and closed out just shy of 109. So I was pretty happy with that little trade. I did get a little scalp going yesterday and ended up taking profit around 111, 111.50. So just shy of that 112 pocket. And now we're getting a little rejection. I'm still looking to see, this because of this flash crash move, did we put in a bottom? We rally back up here. Do we have a higher low that then becomes a three-wave correction to the upside? That remains to be seen. So we will be looking at this next week as we kick off October. I am looking to see if the market can get anything priced in with a weaker dollar, and maybe it does, maybe it doesn't. It's really difficult to assess right now. It's really difficult to call tops and bottoms. The one thing that's really frustrating is we have seen some of the most like sustained and irrational trends that I've seen in Forex, especially in a long time. It's very rare to have Forex trend, more than 3-4 months at a time. And we've literally seen 12, 14, 16 months on some of these currency pairs, 6 to 8 months, super strong on some of these currency pairs. And I mean, again, for trend traders, I'm sure you love it. For traders like me that I like to trade structure and price action and highs and lows and extremes, I've seen some of the biggest extremes I've seen in my whole career, monthly charts that don't print over bought over sold conditions ever. And we have, probably a dozen currency pairs done it this year out of the 28 majors and crosses we trade. So it has certainly been, to me, a very unique year in Forex. I'm not going to say good or bad. I mean, I'm doing my best, but it's been frustrating because the way I position trade has just caused me to have had to be really patient and work through some trades and stuff. But my robot trading, automated trade has been going great. I think between the two robots I've been running, most of the time they're up like 15, 16,000 pips. So that certainly helps pad the bottom line. And I'm just trying to work through some positions. So that is that. Yeah, strange year, frustrating year. That's it. Pound Aussie. Yep, we'll take a look at Pound Aussie. Donna, yeah, thanks. Yep, let's go Pound Aussie. So Pound Aussie, I would look for, this is what I'm looking at. Now, number one, I was a little disappointed that we didn't have a pending order filled. I really wish I would have put in that 1.60 trade. We talked about it in Flex, 6,000, a nice little pending buy. The low here is around 59.30, but man, what a great fill off of higher time frame structure, 1.60. It's up 1,000 pips, and it happened within 5 days. Like that's awesome. Now looking at it now, we've come back and we had our flash crash. We came all the way back to fill. I am looking for this to be a bottom. So do we have a little bit of structure here? If we have a pullback, I would look for some type of consolidation. And if we get a breakout on the Pound Aussie, I would look for this to head back up into this area or start to eat away some of these pockets and pivots back up around 1.8 or 1.85. Okay. So what I'm looking at is, did this market just aggressively price in pound weakness, price in, UK recession, price in this pound social program for energy, all in one giant move? Maybe, And so what I'm looking for here is there any structure that we can trade? If we get a breakout, can we trade with a tighter stop and not have to put our stop loss down below this flash crash low? I'll share the same thing I shared with my flex traders this week. There's scenarios that I'm looking for these flash crashes. Scenario one, if my traders remembered, what we talked about this week, scenario one was this: flash crash moved to the downside, price came back to the middle, and what did it do? It continued up and it filled that pocket. So that was scenario one. Now, because we filled that pocket, I'm wondering from here, do we pull back? Do we have a higher low? And do we have another push coming? So is it going to be a wave 1, 2, 3 to the upside? There might be another wave of pound strength coming. Okay. But just to be on the safe side, if this is starting to pull back and it starts to look like the pound is starting to crumble again, don't force those buy trades. One thing I'm really not going to be a fan of is, let's say you take a Fibonacci and you go from this low to this high and you're like, okay, I'll buy the 382 and I'll buy the 618. Look, this market might come all the way back down to the lows again and test that level. And we might have to trade a double bottom or some type of range trade based on that flash crash. So I would much rather, align this, get some confirmation, trade a little bit more aggressively and precisely inside of that, lower time frame arena versus the big picture. I'm not comfortable with a swing trade and flash crash lows as stop losses. So next week in the flex room, we'll probably jump in more to the smaller time frames, take a look at some structure, set some levels, set some chart alarms, and follow along. But it does look like, I'm going to try to use this pound flash crash move from Sunday, Monday to see if we're cementing some highs and lows in these markets. Okay. No coincidence. Yeah. And, this is also not a coincidence. Look at this. This is even crazier. Take a look at the monthly chart on the pound US dollar. How about right there? This is 1985. And we had at 105. So did we come back to it? Yes, we did. I know I have a bunch of lines over there, but can you see the crosshairs? 1985 low, and we tested it. So this is where the market came out with the headlines, pound at 37-year lows. Well, there it is. There's your 37-year low. And what did it do? Reacted like crazy off of it. It's up 700 pips off those lows. It actually went up, nearly 900 pips. It came right back to that 112 pocket. So pretty amazing stuff. I mean, that is one thing. Again, I'll give Forex all the credit in the world. It seemed like we had these crazy irrational trends, and we have. I mean, you look at this monthly chart. I mean, we have 13 or 14 candles to the downside. That's a lot of trending because of a stronger dollar. That's a lot of trending because of a combination of a stronger dollar and a weaker pound. But the market still does care about these levels. And, 37-year lows, market reacts. That's why I like to buy low and sell high. So yeah, cool stuff. Okay, let's take a look at some other pairs. Like I said, any requests? Have some stocks to take a look at. I was looking at consumer defensives. I was doing some pontificating on Campbell Soup this week. I was looking at a potential strangle. It just costs a lot of margin to do it, but I still like the trade. It's like a nice little 30 cent income trade. I didn't take it because I'm just very margin conscious right now and cash conscious. Because if we're going to have more downside, I want to ride these credit spreads as low as possible. If I'm going to take some ownership, I'm going to pick my favorite 5 or 10 stocks that I really want to sit on, hold, and look for some decent returns. But watching some consumer defensives, retail's been hit pretty hard. Nike news came out last night. Nike, look at this big gap. Wow. So if we're gapping at 83.26 on Nike, that's going to bring us from highs to lows. That is 53% off the highs. That's a massive correction for Nike. You know what? I'll put it in perspective, though. This is a monthly time frame, and we have a pretty high bar count. So we could just be pulling back to this 200 EMA and finding some balance. So one thing that we'll probably take a look at either today or next week in Equities on Demand is we might look at some Nike credit spreads. Not a big trade. I wouldn't necessarily want to take ownership, but if we have the ability to, scoop Nike up at $80 or $75, 50+% off the highs, I think it's worth looking at. But it drags everything down with it. American Eagle Outfitters, dropping to fresh lows. We're in single digits now. Lululemon, I think it's Lulu. Yep. So Lululemon's dragged down with it. So big gap to the downside, and it's officially open here. So we did gap from 297 to 283. Take a look at our markets here. SPY's down 0.22%. So a slight gap to the downside. We still haven't filled this gap from, when was that gap established? The 21st. That would have been last week. So we still haven't filled that gap. And today is end of month, end of quarter. So is it going to end on a terrible note? Usually Fridays are up days. Usually. So I'm curious to see what do the markets have up their sleeve. Is there some short covering? Is there some dumping of positions? Is there accepting losses? Are we going to ignite, more selling with stop losses being? I don't know. We'll find out. But I'm ready for this week to be over with. It's going to be a pretty long couple of days for me. So class right now, class at 10. I'm talking Eastern time, class at 10, webinar at 11, class at 1, and then a 24-hour road trip. So I'm heading back to Michigan this week, but I will likely be coming back to Utah here in probably 2 or 3 weeks. So I like it out here. It's pretty nice. Dollar yen price reached 144.83. 4 times now the 4-hour chart. Could not close a candle above that level. Yeah, we'll see. I mean, like I said, look at the BOJ intervention high, right? I mean, I would not say that 144.60 level is necessarily resistance. It certainly is holding right here, and that's why yesterday I put in that 143.40 sell stop, because if we are consolidating, just like I said, just be careful, because this could just rally back up here, consolidate, come back up to the highs. I look at this. If we reject off this candle, I'd look at just a sell stop right here. If we're right, then price is going to have to come back and fill us, and we'll get a head start, hopefully back down to the BOJ low. We go lower. We've got our daily bar count. We have all these pivots in a row, by the way. That's 1, 2, 3 weeklies in a row, plus a monthly, plus our daily bar count. Again, technically, it's as good as I can find. Monthly overbought conditions, but it still has to behave and still has to confirm. That's what's not happening. What we've been seeing lately is the dollar and the yen have been moving in tandem together. So they're both strong, they're both weak at the same time, which isn't exactly my favorite setup. Euro Swiss, we at least came off the lows a little bit. There's still some climbing ahead. I'm looking for this trend line on the daily to break. And I'm still pretty determined to, hold this. If we see closes above 97, 97.50, I'm just going to stack up some buy stop levels, try to get to 103.50. The pound Swiss made a nice recovery this week. So pound Swiss all the way up to 109. We had highs last night around 110, just shy of that. So again, can we put in a bottom? With this big flush down, can we put in a bottom? Do we have a pullback and some consolidation? Can we get a trend line break? Is this a low to high? Can we form a higher low and then break to the upside? Because if we can, then that puts us back into some monthly pivots. That puts us back into an EMA, puts us back possibly in this like 16, 18 to 1.20 level. And maybe it even puts in a multi-year low, maybe. So that's the pendulum shift I'm kind of looking at. At these crazy lows we're at, beyond the 2015 flash crash lows, beyond the COVID of 2020, beyond the Brexit close. This is the lowest I've seen the pound Swiss ever. So I think it's interesting to see if we can buy it nice and low and hold on to it for a little bit and see if it wants to retrace 1,000 or 2,000 pips. Okay. Derek, that is correct. Yes. So I just feel like it's a better place for me to be. I mean, I can work remotely and work with the fund, or I can be out here and, get my hands dirty in it, which is where I want to be. So office is nice, area is nice. It's going to be, I'm already accustomed to winter, so it's not like that's going to be a surprise, but out here, there's winter that you can actually do stuff and enjoy it. So, I'm probably going to be looking to be out here way more frequently or just get a place out here. So yeah, you'll find out, but it's maybe a few weeks away. Otherwise, it's going to be a road trip back to Michigan, and that's what's happening this weekend. So me and Benji just hanging out in the car. All right. Okay. So that's our pound stuff. Some other currencies. Let's see the old Swiss yen, 147.46. I did get filled on a little pocket trade around 148 and change. And, looking at that big BOJ candle, do we break to the downside? If so, I'm measuring that move that should project us back into like 134, 134.50. I just measured this candle high to low and then copy and paste that to the downside. It's like 135. Also, we have 2 pivots in a row. We have monthly pivots, weekly pivots, you name it, monthly overbought conditions, historical highs as well. So can we get a 3-wave move, right? If we have trend, can we get a 3-wave move? That's all I'm asking. $2, trend. Can we get a 3-wave move? This is yet to happen. So it's just the items you look for, the technicals you look for, they probably will happen. What I'm going to be, making sure that I don't want to shortchange myself on the profits. If this is high, low, lower high, lower low, great. But there's also a projection here. We're sitting at these crazy highs. Can it make a 5th wave to the downside? Can we just take a larger swing low to swing high and look at a 38% or a 50% retracement? All of these levels, again, technically make sense. So this is why I've been holding on to some of these pairs. This is what I'm looking for. And when things start to roll in to confirm, traders know this in the flex room, like we're going to have to get a little bit more aggressive. I think there's big profits to be made. If we're willing to hang on to trades this long, we're trying to stay pretty objective. And so if we see some confirmation, we need to ride it, and we need to measure it, and we need to have everything like planned to the minute details. Right. Susan said, I forgot you drove until I heard you talk to Benji. Yeah, he's been good. He's been great. He's been going with the flow the whole time. We've had to, I've stayed in 3 VRBOs since I've been here. Coming into the office, I'm up at 5 in the morning because of the time change. So Benji's just along for the ride. But, if you can see him right now, there he is. I'm going to wait for, there's a little lag in the Ustream or but he's just hanging out in the lap. There he is. So anyway, he's a trooper. So, all right. I'll do this. I've got equities on demand at the top of the hour. I'll be back in Michigan starting next week. So we'll return to the normal schedule, 8 o'clock Eastern time, Tuesday, Wednesday, Thursday for flex. Monday and Friday, I'll go back to my YouTube channel. I'll have, more of the fancy bells and whistles and stuff. But if I'm coming back out here in 2 to 3 weeks, then, I'm bringing all the stuff I need. I'll bring all my work stuff. I'll have a workstation officially set up. This has been laptop and a couple of monitors. So it's if I'm coming out here, it's going to be official. Yep. So Anyway, but have a great Friday, everybody. Equities on Demand students, I'll see you in the next 20 minutes. Let's close out the week and the quarter really nicely. Just keep in mind that it is end of week, end of week, end of month, end of quarter. So there might be some, volatility ahead. Watch the currency strength chart. Keep an eye on your highs and lows in stocks, and we just continue to trade. There's more drama ahead, whether it's good or bad. The bulls might have this nice buying spree. The bears might keep the pedal to the metal and keep the pressure on. The reality really isn't changing. If the Fed is here to extinguish inflation, then guess what? They're going to do it. Now, I don't think they're going to do it with 6, 7, 8% interest rates. I think they're doing enough right now because they're crushing demand. They're just everything you see headline wise. Inflation is, inflation's still sticky. Inflation's still high. But guess what's happening? People aren't buying stuff. People are finally, case in point. My buddy here, he just sold a truck. He was trying to get all of his money out of that truck. It was a $40-some thousand truck. He tried to get $40-some thousand for it. He's like, man, last year this would have been no problem. I'm like, right, but now it's back to normal. So he accepted, $32,000, $33,000, whatever it was. So, you buy a car and you take it off the lot, it depreciates. That's normal. You have a house, it's not worth 2-3 times what you paid for. It's like housing prices are coming down. Interest rates are super high right now. Again, you go back 20 years, it's like, I remember when I closed on my house at 18%. I know that's 20 years ago, but we've had super low, near, 2-3% interest rates. So Mortgage News Daily, I don't know if we're above 7%, but we're close, 6.82%. That type of rate right there is changing mortgage rates. I think the average mortgage payment is up like 50% since last year. I mean, it's squeezing people out of properties. I mean, you wanted to close on a house, but the interest rates went up. Guess what? You probably can't afford to buy that house because now it's $1,500 more a month expensive. That's a big difference. So people are backing out of contracts. People are backing out of builds. People are going to sit and rent. So it's going to be a contraction. If we feel it in housing, we're going to feel it in retail. We're going to feel it in hiring. Tech has already been cutting jobs like crazy, but it's going to start transferring over into other sections as well. So look, this is what a recession feels like. Whether we want to acknowledge it or not, we're in one. But what I said this week is the Fed going to be allowing and again, it's not they're not allowing it, but does the Fed want to see a recession or recession plus high inflation? And they're choosing door number one. So they will continue to pound that message home. We're going to raise rates. We're going to stay hawkish, and they just won't give us a definitive level, right? They're not going to tell us like, we're not going to raise above 4.5%. They're going to make the market think that they'll do whatever it takes. And so far, they're just looking at overall contractions and prices have to come down. So right now, I think the one sticking point is inflation, and then we still have a tight labor market. So they need to start doing something where if we see unemployment trickle a little bit higher because we have cuts going across the board, that's probably going to get inflation down where, maybe it's a little more acceptable. Maybe it matches what we have for these rates. I think 2% inflation is years away, but we'll find out. So, but again, I'm not a perma bull or a perma bear. I am a trader. So whatever the market's going to throw at us, we will adapt. Hence the flex trading room. Okay. So, all right, Brad. Yep. Good thoughts. Hey, everybody, do me a favor. For everyone watching, will you click that thumbs up button for me? It's nice when, we have 50, 60, 70 people watching live and we get 50, 60, 70 likes. I think YouTube likes it too. That helps the algorithm a ton, gets the channel out there. Okay. So hit that thumbs up before you go. And next week, be back in Michigan, Monday and Friday for the YouTube channel, Tuesday, Wednesday, Thursday for Flex, Monday through Friday, Equities on Demand. If anybody wants to trade with me, I know that, usual suspects are in the room today, but if anytime you want a, very inexpensive month to trade with me, you can check it out on the pulverport.com website. Go to my trading room. There's a trial. You can take a trial for $27 and, trade with me live all month. So trade Forex with me, trade stocks and options with me. And yeah, that's what we do. All right, everybody, I'll let you go. Have a good rest of the day. Have a great weekend. And I'll see you next week. Thanks. Bye.